Hey gang, this Friday I'm going live on Loan Officer Breakfast Club and I'm going to create 30 days of social media content live. Actually create the content, schedule the content and get it posted out. And then I'm going to give you the prompt that I use in order to actually do it and show you the tool that I'm using in order to actually do it. The content is going to be to attract top producing real estate partners to send you mortgage deals. It's going to be absolutely amazing. LoanOfficerBreakfastClub.com, Friday morning, 8:30 Eastern Standard Time. Looking forward to seeing you there.
All right. Well, hey, man, we hope you're doing well. Just saw you there. Just thought I'd say good morning because I don't think I've seen you here before personally, but I'm sure you've been here plenty. But anyways, just wanted to say
I
good morning to
appreciate
you.
that. Thank you.
You,
And
you
I
bet.
love listening to you guys. It's a
Awesome. Awesome.
great start
Awesome.
of the morning.
Wonderful. That's right. The best way to start your day here at Loan Officer Breakfast Club. But you know what, Carl? I think it's time we just get to you know who. Mr. Owen Lee!
It's not like morning. It's not like much is going on, you know. It's like, you know, the world's at peace
Right.
and it's all unicorns, puppy dogs, and rainbows.
I know. Everything's going according to
That's
plan
right.
perfectly, as
No
always.
inflation, federal
No.
budget is balanced,
Yeah.
Yeah.
all good
Yeah.
stuff.
Yeah.
Yeah.
All good stuff. Does anybody have like in America 250 hangover this week? I got to be honest. I got a little one. I
You
got
did?
I got
Still,
really
huh?
I got really into all that stuff. I loved it. I loved every little bit of it.
Awesome.
Anyway,
Awesome.
but
We went to church
yeah.
that
Good
night.
morning,
Owen,
everybody.
so me and Frank went to church that
What?
night. So no, we didn't. We were at church.
Lots of fireworks. So anyway,
Yeah.
All right. So let's hop into it. I appreciate Rudy Devers giving us a little West Texas Intermediate update this morning and a little mortgage-backed security. So we're going to go into the slides and we're going to take a look at what's happening and we're going to do Owen's version of a broken record because I just feel like that's where we're at, you know, in this market. Really, it's still all Iran driven.
Yeah.
You can see what's happening. It really is. You know, you have Fed Day. This is a chart going back about 3 weeks. And if you really take a look at it, all the movement in here is within about 60 basis points, right? So these are not huge moves. Sometimes when you zoom in on the chart, the moves seem exaggerated. All these moves are within about 60 basis points in price. This is really, you know, an eighth to a quarter in rate, depending upon where you are on the rate sheet. But you could see we had a little reaction to Fed Day. We went down because, you know, the Fed was a little bit more hawkish, which we're going to take a look at in a second. They were a little more hawkish, a little more prone to raise rates, changed their outlook, and we dropped like 40 basis points, and that lasted 2 days. And then the news from Iran got good, and oil started to go down. Oil touched below $70 a barrel. Market got ahead of itself, and it rallied about 55 basis points and stayed there for 8 days. You know, and then we had this kind of technical thing that goes on at the end of a fiscal quarter when a lot of mutual funds and stuff have to rebalance their portfolios at the end of the quarter. We had a little sell-off. You know, now we got some trouble with Iran. You know, the ceasefire is not, you know, is getting kind of medium hot. And, you know, the two sides are testing one another. And so this is really all Iran driven. In here, which we didn't even talk about, we got a disappointing jobs number. It came out a day early on July 2nd. I think it was 58,000 jobs, and it moved the market for about 3 hours. So the market is really totally inflation driven right now. Hey, the only thing it's watching is Iran and oil, and then oil's follow-on effect on inflation. Everything else is just noise right now, and until we're well past Iran, it's really an inflation and oil story, and I think it's going to be that way for a little bit, because I'm no geopolitical expert or anything like that, but I think we all know, all 200, however many people are streaming, 300, 400, we all know that these two sides don't like each other very much. And so that's just going to happen for a while. But let's take a look. Then if we can go to the next slide. Let's just take a look at kind of how things are moving right now. You know, people always talk about the hawks and the doves. What does that really mean? You know, a hawk is somebody who is right on inflation. They want to stamp it out. They're a Fed governor that is more likely to favor higher rates, more likely to raise rates, and more likely to pound on inflation. A dove is more peaceful. That's somebody who thinks inflation is not as much of a risk as the others do. They're more likely to have a lower rate outlook and, be more, less cautious and let the economy grow and let productivity take care of inflation, because productivity is really the elixir for inflation if you have low rates. So, you know, if you just take a look at this, the hawk view is above. We have new strikes on Iran. Oil goes up. Inflation goes up. Fed is forced to counter inflation. They're more likely to hike. You know, the so-called doves on the Fed board, you know, they see the end of Iran. They see oil come down. They see less pressure on inflation. Less pressure on inflation focuses the Fed on the other part of its mandate, which is jobs. Jobs numbers have not been that great the last 3 or 4 months, and they're more likely to pause or cut. So this is what we have going on. But right now, as you can see, the magic word in both of the beginnings, Iran and oil. And that's really what's driving the market right now. So it's the same story we've been telling for a while. Like I said, I don't think it's going to change until this thing is well past us. 90 days in the rearview mirror. We're going to be fighting this for the end, till the end of the year, probably. All right.
Is that where you kind of see this, Owen? And I know, and look, nobody knows this, all right? And this is beyond any, you know, reasonable. Well, typically what we see is that obviously doesn't apply here. Do you kind of see this back and forth with the Middle East, like going through the rest of the year kind of thing? Is that what you're seeing?
Well, I think we need about 60 to 90 days of confidence to keep the oil number. You know, we touched the high 60s in oil, but the high 60s needs to stay there. When it goes down to the high 60s for 3 trading days, and then somebody fires a missile and it jerks back up $6 or $7, it's not helpful. It needs to go below 70 for 60 to 90 days for it to start to have that effect to pulling inflation out where it's already spilled over. So if we get the ceasefire and then we get the follow-on agreement, and it really gets put in the rearview mirror, I do think oil will go below, because we're pumping more oil than we ever have in our entire lives in the United States. We don't even need the Strait of Hormuz, but the rest of the world needs it. So that's why it has an effect on our inflation. So I think we need oil below $70 a barrel, and we need it below $70 a barrel for 90 days to start to wring some of this excess inflation out, probably longer. And I don't see that happening when every 4th day, you know, you get some kind of wildcat missile launch and then a retaliation and the market gets skittish and pops back up. And, you know, I just think we're going to be fighting this for a while. I think 6.5-ish is where we're going to be for most of the rest of the year. Every now and again, we might get down 6.25, you know, 6 1/8. Hopefully we don't go back up, but I think we're riding 6.5 with a little change in the price, 50 basis points up and down for a while.
Interesting thing. I just saw the newest numbers also that the refi market is still very robust. It's an incredibly, it's not the largest part of mortgages, but it's right up there. Like the amount.
High 30s, 40%, touching 40%.
And I think that's one thing for us all.
Out.
Yeah, for us all to keep in mind that these cash out refinances are still an enormous piece of business nationwide, not just for our branch, but nationwide.
I'll just say one more thing about this. We could sit around, and I mean this sincerely. We could sit around and bellyache about it being 6.5 because we were at 6 150 days ago, right? And that's fine. But you are the master of your own destiny. If you can get into Next Level Coaching Club and have an 87% shot of doubling your income within 12 months, how many people, think about the economy as a whole, nurse, police officer, public school teacher, accountant, doctor, lawyer. Do any of these people have an 87% shot at doubling their income in 12 to 18 months?
No.
Yeah.
We are so gosh damn fortunate to be in this industry where we can apply what my old Polish grandmother used to call elbow grease, just really kind of getting in there. And we can double our income. That's a public school teacher could work 20 years and not have a chance to double their income.
Oh, and by the way, 87% doubled their income.
Yeah.
Yeah.
Right.
Almost.
And the other 13% are probably only up 60%.
Yeah, and that's the thing. The ones that were 95 didn't make the cut, so to speak. So it's
that's right.
It's impressive.
That's right.
Yeah.
So let's get to one last thing.
Can we just look at one thing
Frank,
no problem. Just one thing real quick. I'm sorry to interrupt, but in the chat, not
at all.
In the chat, what's your percentage of purchase business in your pipeline right now? What percentage of your pipeline is purchase? I'm just curious to see this because clearly you're going to make a point about it. So you see 80, 90, 95, 100, 95.
Yeah.
So all I wanted to point out about this, guys, is that like Jim Yarrington 70, he's more in line. If you're in that above 70, if you're in that 80, 90, 95, 100 purchase. All that's saying to you is that maybe we're not digging deep enough into the database. You could probably get an increase there because overall, if refis are 30, 40% of the overall business, right, Carl? See what I'm saying? Yeah. It's of course, we put a focus on purchase, put a focus on rentals, always. That money's stable. But it should indicate to you that perhaps maybe you're not digging into the past client database stuff. Right.
For instance, I'll show you a good example here. So I hope it's okay for me to share this. Tara McCafferty just sent me a text the other day of a little video that she did where she's part of the 87%. She doubled her closings, right? In her case, it wasn't 18 months. It was year over year, the last 12 months. She doubled her business and she just put in 35% was refi. 35%. So 65 purchase, 35 refi. So that's Frank.
Yeah. So if your number's really high, skewed high on the purchase side, take another look at digging into the past client database because there's business in there.
Last thing I'll say, Lisa put in the chat, everyone's waiting for rates to go down to refi. Lisa, I would just respectfully add an asterisk to that. That's true for rate and term refis, but the market right now is almost 40% refi. Nationally.
Yeah.
Which means that
to Lisa's point,
a ton of cash outs
I think the mistake is a lot of loan officers are waiting for the rates to go down. That's the problem. It's not the consumer.
Maybe.
It's the loan officer bringing it to
I have no doubt that everybody's got a lot of conversations with people saying, well, I'm going to wait a little bit. But you can't argue with the math of where the market is. It's basically 35 to 40% refi right now.
Yeah.
So let's get to one other thing I just wanted to touch on. I want to wrap a little bit this kind of series that we've been doing about what you need in order to be successful in the future. So I just want to recap for a couple of seconds what all the loan officers need in order to really reach the apex of your income, right? Over the next 12 to 18 months. And you know, we've talked about some tools that we have in the AI commission engine. I want to look, let's go to the next slide real quick. You know, this is really what it is. It's cylinders in an engine. And all these cylinders are pumping to fuel your commission checks. And, you know, at Carl's team, we've got a lot of these inside of SMP. We've got a lot of these things. We are producing new possibilities, new mortgage possibilities every single day. It's over $400 million in the last 5 months of people in the pipe that this thing has put in. That's over $5 million in commission checks in our world. This thing is totally taken off. And we've talked a lot about what we have. I just wanted to take a minute to look at what some other people have said about this, right? Let's look outside. Jen, if you could go to the next thing. Look at all these. They're so easy to find, right? On the operation side and the market side. You know, Housing Wire, Better Mortgage, right? This is a really amazing company. They've got really visionary leadership that I don't know executes very well. This is the guy that laid off 900 workers on a Zoom call and then had to take a leave of absence, right? Questionable, but his vision is strong. They're unlocking up to $2,000 of additional revenue per funded loan using AI, getting to the borrower faster. It's pushed loan officer productivity to 3 times the average, right? And that's inside of that company. We're seeing the same thing inside of our company, the same thing. If you don't have these tools, how are you going to compete, right? How are you going to reach the apex of your income without doing these things, right? Take those people that are 100% above, infuse this on top of it, they're going to go 100% above again, which will be 4 times where they started. Stratmore, which is one of the leading think tanks in the industry, says that lenders adopting AI primarily for productivity, consistency, and customer experience, right? Productivity, consistency, and customer experience. They're doing more loans, right? They're going to get a larger share of the loans. Housing Wire, again, just last week, productivity gains are real, efficiency improvements are measurable, and the competitive pressure is accelerating. You know, Mortgage Professional of America publication, PwC, PricewaterhouseCoopers, one of the leading consulting companies in the world, says workers with AI skills earn at least 25% more than average. So what does this say? AI will not pay every loan officer more equally. It will widen the gap between advisor-led originators and heavy admin-heavy administrators. That means, what does that mean, right? It means if you're a loan officer who's concentrating on getting the next mortgage, bringing it in the door and handing off, and then going to use AI tools to go get the next one, you're going to make way more money than an old-fashioned loan officer who's still got his head in his deals, right? Let's take a look at one more slide, right? Here's why AI-enabled loan officers will earn more. Same comp plan. Same plan. You've got more AI-enabled opportunities going through it. Your loans go faster because your automated follow-up, your doc collection, your underwriting. Like in our system, we have that same-day underwrite in by 2 o'clock, out by the end of the day. We're now measuring these loans. And now, it's not every loan. It's got to be a clean file, but it's coming out in 2 hours, right? That gives them more time for you to focus on using these tools to find more deals. More conversations create more conversations, right? The response is faster and cleaner. You're reaching more people. a wise man once told me that there are two ways to grow your business. One is to increase your conversion percentage, which we talk about a lot. And the second way is to make more offers, right? God, I wish I could remember who it was that told me that. I can't not remember. More funded loans equals bigger paychecks. So if an originator can handle, if you guys can handle more funded units, got to get on this AI train, right? I know we've talked about a lot about what we're doing inside of our company. Jen, I don't know if you can go back a couple of slides to the one with the QR code on it. The evidence is everywhere. It's not just SMP. It is lenders all across the country, and you got to get on the train, right? You have to get on the train. So I got that QR code on there. If anybody wants to snap it, it'll take you to our website, which is AICommissionEngine.ai. Pretty simple, AICommissionEngine.ai, and or just scan on the QR code, poke around, reach out to us. If you want to throw more info in the chat, we'll be happy to contact you. But if you look at it, Better.com, Oculus, Stratmore, you can go back and research, Rocket Mortgage, $14 billion to buy Mr. Cooper and Redfin. Why? Because they are going to use AI to be first to those people. And, Carl, I got some new stats on being first. We'll talk about it sometime in the future, the magic of being first. But I want everybody on this call to be successful. And there's going to be a separation between the people that are using this and the people that are not. Remember what the chief technology officer of UWM, United Wholesale, pretty big company, right? Love him or hate him, pretty smart company. He said, AI won't replace loan officers, but the AI-enabled loan officer will replace loan officers who don't use AI. So it's right there for you. I want to see everybody be successful. Reach out and grab it. And coming up on 9 o'clock. So that's all I got. I ran oil.
I got a question
AI.
for you.
Yes, sir.
So I'm not an attorney, but attorneys know never ask a question you don't already know the answer to. I don't know the answer to this, right? So how is the outbound? And bring everybody up to speed. One of the ways that we're getting this $400 million in the last 5 months of new business, I think one of the ways is outbound phone calls where we have an AI machine outbound phone calling real estate agents. But like let's say I don't know, let's say Alina, we don't do her town per se. We take 3 towns over, as we're testing this, and we might be doing it in our own backyard now, but originally we were doing it not in your area, but like a couple counties over, just as we're testing this thing. So on these outbound phone callers that an AI bot is doing, setting appointments for qualified agents to loan officers, how is that working now? Have we got a big enough test to do that, or does that warrant a special day?
Yeah, it's scheduling at about a 3.5% clip. So let me just walk you through the math, right? So in our world, we do about 5, each loan officer will get 500 outbound calls a month. Now, the loan officer pays nothing for this, right? This is something we do for them. And so they get 500 outbound calls. So we research in the market area that you want realtors who actually close deals. So we're only calling realtors that have buy-side transactions to refer. The system calls them. We can do this without TCPA compliance because we're not selling them a product or service. There's nothing for them to buy. So we call them. So we're converting appointments at about a 3.5% clip. So what that means, if you make 500, the system makes 500 outbound calls, it's putting 16 to 17 realtors on your calendar. Okay. The realtors are showing up at about a 2/3 clip, right? So from that 16 to 17 scheduled calls, first of all, you get all the information in the call recording on every single realtor. So you can call them back right? You can actually call too. That improves your pull through, but you net 10 appointments for nothing, right? The system researches the realtors, makes the phone calls, schedules the appointments, 3.5% clip, 500 a month. That's about 16 appointments. 10 of those appointments show up. So you get 10 appointments, coffee appointments every single month that you did nothing. Create. The system does everything except show up and drink the coffee.
And we're working on it.
Step it up.
We're working on it.
Yeah.
That's right. So if you can convert just 20% of those, that's an additional 2 referral sources a month. Do that for 12 months in a row.
Hey, if you want to, if you're
24 new ones.
Owen and I were talking about, we try to be really cool here, but we thought, how could we not have this information and not share it? Like that would be like a jerk in my book. If you have great information, if you know where the water is and you're in the desert, not to share that source would be crazy. Hey, if you want to like hear about the scripts that we use or the technology that we use, I don't have a QR code or anything. You can just put like tell me more or something like that in the chat, and we'll show you exactly what we're doing. And very, 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 very interesting stuff that the AI stuff is doing. I have to say, Owen, when this AI first came out, I thought, because at first everybody's just doing, making me look like Superman, putting a cape on me,
right.
but we didn't know what to do with it,
right?
And
it was fun, yeah.
And then when we started like putting a bunch of smart people in the room, going, all right, it's fun, it's cutesy, hey, and we enjoy playing a little bit too here, right? I get that.
Yeah.
How do we turn this into actual loans? And we put the team in it. And so we have 8 different ways that we close more loans using this technology. It's impressive what it's doing. It really is.
Yeah, and I tell you, I think we're up to like in the very first week, and this is the week after 4th of July, we're up to like 60 new realtors wanting the co-branded 24/7 pre-qual hotline. That tool's totally designed for the loan officer. It's crazy. I think Carl and I are going to do like a separate 1-hour webinar just on this stuff to take a deeper dive to show everybody how it works. That'll be apart from Loan Officer Breakfast Club, coming to a theater near you soon, I guess, as they used to say.
Yeah.
It's amazing. Like I said, I'm as excited about this as anything I've ever done in the mortgage industry since the day I got in my car, drove to Lansing, Michigan, and filed the incorporation papers for our mortgage company in 2002, May 1st, 2002. This is amazing stuff.
I heard Elon say the other day he's more excited about AI than he was the internet, when it first came out. And and just FYI, and correct me if I'm wrong, Owen, when I say we have 8 different ways that we use AI to close more loans, it's not that there's anything wrong with this, right? But it's not Facebook postings. It's not article creation. It's not, the classical content creation type thing. It's actually loan officer type activity done by AI for you on your behalf. And
so just to be clear, 7 of the 8 platforms have nothing to do with content creation, not social media or whatever. The only one that does is we have a Google and AI, like a Chat GPT, get you recommended, and that creates content and then puts it in places where the system knows that AI is going to look. So it's produced. Of course, a human being using the internet could find it, but it's primarily produced to tuck it into places where only AI is going to see it to help your recommendation stats.
By AI. So when somebody goes into Chat GPT or Claude or whatever, that Claude recommends you.
It says, who's the best loan officer in Peoria, Illinois, right? That's how that stuff is found. So 7 of the 8 platforms have nothing to do with content creation or open house flyers or all this stuff that we thought was really cool 18 months ago. It's moved way beyond that. If you're not using AI to promote yourself and get new prospects every single day, you will never maximize your income in this business.
Yeah.
It won't happen.
Not going to happen.
So you've got to be using it in ways that are produce prospects for you. And that's what our system does. Millions of dollars every single day. It's really exciting. So
it is cool. Awesome stuff, man. Owen Lee, everybody. Thank you, sir. As always, super appreciate you. Such a blessing to have you here. And Bill Rudy says, got to jump
my week, Thursday morning.
Well, we appreciate it, man. Thank you for popping in always.